Monday, May 6th, market analysis. Stan Ehrlich, good morning. And I'm going to remind you that I will be presenting for the Money Show this Thursday, San Francisco International Airport, the Hyatt Regency, for the Money Show again. And the topic is cyclical analysis and how it applies to automated trading systems. Of course, on my show, this YouTube show, I basically talk about my opinion with the indexes and the futures markets, and oftentimes show my automated trading system. But for today, I'm having some trouble with my data feed. So we got just the generic candlestick charts. Okay, we've got a new high again in the S&P 500 E-mini by a decent amount, but we're not quite overbought. We could get up a little bit more. I wasn't expecting quite this much strength on this rally, and I allow for another little bit of a move up. In fact, another little resistance area would be right around the highs we have so far. So let's take a look at the detail. Well, we've jumped up to that resistance line, and on a very short-term 1-minute basis, 5-minute chart, excuse me, we are at 80 on the RSI, but that is very, very short-term orientation. So it could top out right here. I don't know. I'm going to pass on this. I do expect the markets to get some bad news and some downside retracement, probably interest rate oriented, maybe something else, very soon, very quickly this week, and have a downside correction, which is not happening so far. So I'm wrong at the moment. Don't like that very much. Next chart, we got the spider. Two gaps up in the spider. Gaps are almost always closed. We've seen lots of them close. There's another one only a couple of weeks ago that were closed, and I'll erase that little rectangle marker to show you where the gap was, and that it did a couple of days later come down and close it. So it's history. Now, will these two gaps, the last couple of days, Thursday to Friday, Friday to today, get closed? Again, usually yes. 1-minute chart. There's the gap up on Friday substantially into resistance through it, and then back to what is support. After you go above resistance, it turns into support. It held and then closed firm. This morning, we got the follow through. But, you know, I'm still skeptical about this rally in general. This is the daily data on the QQQ. It's ran up and gapped up once this morning again, but it looks like the low is equal to the high of Friday. So if there's a gap left, it's extremely small. Probably not. But that one is certainly big. And that one's Thursday to Friday. Short-term data, 5-minute, up into a major resistance area. Above it somewhat at the moment on the gap up this morning. We'll see what happens next. I'm looking for a downside retracement in all these indexes, and I'm not getting it. Little off balance here, to be honest with you. NASDAQ futures, new high. Resistance didn't stop this rally like it looked like it was in the process of doing on Friday, but we got a follow through. What about the 5-minute NASDAQ? June futures contract nearby. Minor new highs this morning again, of course. No detail here shows me it's about to turn around and head south yet. And we got the Russell, also a minor new high. But none of these are all that overbought, and some are in resistance areas, but not quite. So I think I have to tell you I could look at a little bit more strength here for a few more days, maybe to get overbought and hit another resistance area above the market and then turn down. I might be too soon. Russell, 5-minute chart, minor new highs, keeps going. Well, let's look at the YM, which is the QQQ futures contract. Also, again, trading at the moment where it basically opened. We did get a new high. Again, looking for in all of these indexes a little bit more downside correction. And the YM has slipped back to around where it opened. Actually, it made a minor new low for the day just a few minutes ago. So that could be something interesting. I have to see the rest of them follow suit and have to see a lot more weakness here. And we're going to go to the bond market. Not quite new highs. Don't expect that much more rally. There's a chance it could get to the top of the channel in the next few days, but I doubt that. We've got resistance a little bit higher, around 117, small numbers. We're not close to overbought yet, so that leaves some elbow room on the upside before something bearish starts to develop. 10-year notes, basically the same story. Maybe it'll reach the top of the channel also and turn down. That could correlate very nicely with resistance levels, which I will draw in a resistance line here for you, right about like that. And let's lower it just a little bit. That's a little bit better. So what is that? 109, almost 110, not quite. And we're at almost 109 right now. Friday, we were well above that. We were at 109.08 and a half. So it could rally a little more and then turn down. So I got to give everything here a little more bullish elbow room. Well, what about energies? Crude, heat, unleaded, well, and natural gas. Inside trading range day, higher than where it opened. Doji was oversold. That means that we could be bottoming out here. We also didn't hold the bottom of a support area, but there was other support at lower levels that it did come down to and touch. I'll draw another little line for you here real quick off of this particular high. And that ends up being very nicely at the low of Friday and today. So maybe a rally starting here. We've already got one underway in natural gas. We've been able to make new highs in natural gas now since April 10th. What is that? A month, a little less. No bottom, no bullish engulfing, no ER sell buy signal, only a breakout of the downward slanting wedge. So the bear trend line across the top has been broken on Friday, and we do have the follow through. I think the next stop on the upside is going to be at 2.4. And that's natural gas. Going for gold, silver, platinum, copper. Minor new high. It got close to oversold last week, but not quite. And I got no bullish signal here. So I think there's a chance that this rally is going to fizzle and turn back down again. We didn't get a bearish engulfing major sell signal at the top of the market, which I would have loved. We certainly did get them a lot last year. That's a buy signal, sell signal in the rally high, buy at the bottom, sell at the top, top, and way back there at the top. And at that bottom also, I put circles around them. So not lately with the great signals. That doesn't mean they're not going to happen soon. What about silver? Looking for, again, just a little bit more strength. We're pushing through the resistance area somewhat. Don't know, taking me by a little surprise here. I was expecting it to turn down. This is where money management comes in. If you have a trade on and it's not working like you expect, you sure do need those protective stops. And they need to be placed at the time you get into a trade, not after the fact. Next chart, platinum. Already started to rally well over a week ago. Today, we may have another new high close for the rally, but I do see the possibility of a top formation developing here. I need to go sideways and or lower right away this week without making any significant higher highs. So this strength at the moment needs to go bye-bye, and it starts to have to, needs to make lows lower than today's lows, close there, and keep on going down in order for me to follow through with more description about this possible top. Otherwise, I have to maintain neutral to bullish because I see something maybe, but it's not starting. Next, copper, new highs. We do have a bearish engulfing on the top of the market. The exact high day so far was an ER sell signal officially. We're in jeopardy a little bit. Not yet canceling out that reversal. Any move down at this particular point and making lows lower than last Thursday would make me feel very good because April 30th was a bearish engulfing ER sell signal, period. We have a sell signal at the top of copper so far. Next, soybeans, corn, wheat, bean oil, bean meal, not in that order. Wow, we have a fantastic move up today in soybeans, and we do have a bullish engulfing buy signal on April 19th, the exact low of the whole move. Love it. What can I say? It's the second low in a double bottom, bullish engulfing ER buy signal on April 19th. Watch my previous YouTubes. The strategies were turned on those. I'm having a little trouble this morning with Ninja. I'm sure I'll get over it right away, but I didn't have the time to fix it this morning. We've got soybean oil. I have been mentioning the last few days only that there is a possibility of a big, too big maybe, head and shoulder bottom. The last shoulder low may be developing. Right now, soybean oil is making new highs for a very modest previous 3 days. I really needed to close above 46.10, the high for the last couple of weeks or so. That would cause me to be much more optimistic that my potential shoulder back in July of 22 and the head of the formation around May of 23, and now maybe that last shoulder. This is a very big pattern, almost 2 years. They don't get this big usually, but I've seen them even bigger, but they're rare. This is super bullish long term. The upside objective for this is a terrible, what is this, 40s, low 40s, it's low 60s, 80 something. Huge. Doubling the price where it's at right now, basically. So I'm skeptical that it's going to really work completely. There's such a lot of time needed for this to go up to the neckline, which is the green faint line. No, that's the bear trend line. I'll just drag that a little bit further off in time. Good. The bright yellow is the neckline, and that's around 62, even a month or two for 3 from now. So long way to go. Will this pattern work? Call me up in a year. Next, meal. Like beans and other grains so far, great. The last bottom was a Ehrlich reversal buy signal, ER signal on February 29th, right at the beginning of support, working perfectly. I wish they all worked this well. What can I say? We're getting overbought 85 now for the last couple of days. I think this looks like a little bit of a blow off top. I think we're about to top out soon and pull back for a better buying opportunity probably this week. What about corn? We got the bottom, the low day on corn exactly on February 26th. We have Friday and today a new high for the move up. I'm noticing that we have a bullish engulfing today, an outside up day, bullish candlestick. That sometimes is actually bearish. I call them a bass-backwards reversal for the lack of a better name. They're very rare. I really don't have a lot of history seeing these in the last few decades. So maybe just keep an eye on today's low. If that's broken in the next day or two, then today probably was what I just mentioned, but I don't think so far. Normally, a bullish engulfing means the markets are going to continue higher. But if they develop in overbought conditions, that changes things. This is up to and through resistance. Looks like it's going to go higher. That's what I really want, because I picked the bottom of the market to the exact day so far 2 months ago. Next, December wheat. I'm sorry, not December. July wheat. Yep. We got the bottom day. We actually have 2 bullish engulfing ER buy signals on the low days of March 8th and March 11th. 11th being the lowest low. And today, we're now up to the top of a resistance area on a very strong rally. Again, looking a little bit too strong, a little bit of a blow-off type of activity here. Now, I'm not turning bearish yet, but in overbought condition, I look for reasons to do exactly that, and I don't see them quite yet. Resistance, yes. Too strong, too quick, sort of. Overbought, yes. Previous highs, yes. Resistance. We could be close to a turn down, not the beginning of a bear move, probably just a minor correction and more of a bullish trend. Next, cattle. Like the way it looks. Don't have a solid opinion, so I'm going to beg off. And I've been saying that for maybe a week now. They went to new highs, then went to new lows, and it came back up again. So far, I've been right to keep my mouth shut. Miss Piggy, we've got the top of the hog market exactly to the day, April 10th. New lows to the move down today, great, not a problem. Minimum downside objective on that head and shoulder top I outlined at 92.80. That's my minimum downside objective. That's the last shoulder, April 23. The head of the formation is my bearish engulfing ER sell signal, April 10th. And the first shoulder is not particularly easy to recognize. I think it's a very, I'm struggling a little bit to tell you that it's a great shoulder. It's not. But the body parts are still there, and it's working exactly the way it should be working. The breakout was good, little false breakout right there, but the closing price is the key. And that day on May 5/1 is a big downside move and way below the neckline. Classic lower again next day, Thursday last week, Friday again lower, today again lower, getting oversold now. We're about to have a bounce. Typical bounce on the way down to its, I hope, minimum downside objective, or further south than that, 92.80, and we're getting into ice. So I am going to beg off at an early point today. Thank you. Profitable trading to you. Stan Ehrlich.